Join me in welcoming Mr. Tejas Khoday, who's the co-founder and CEO of Fyers, how the last 10 years have been to get to the point that you are today.
We started Fyers in 2015. Today we're serving approximately 1 million customers with a team of approximately 400 people.
You were a trader. You found this sort of problem.
So I've been using investment platforms since 2006. I almost got cheated by a very well-known brokerage.
How do you build or break the cold start problem?
So I never really had the money to begin with. I was hearing things like you can't buy a jet in this business. I was almost mocked.
What are some other traits that make traders successful?
Ability to handle boredom. Founders dilute to a point where they no longer control not just the company but the outcomes. But the best opportunities, once discovered, you need to take advantage of them.
Hello. Before we get started with this episode, I quickly wanted to share that we are now a part of the Zerodha Media Network. Thank you so much for watching.
Welcome to the Indian Silicon Valley podcast. I'm your host, Jivraj, and today I have with me an extremely interesting guest. Join me in welcoming Mr. Tejas Khoday, who's the co-founder and CEO of Fyers, which is one of India's leading trading platforms, and they've built this over a period of a decade and more, all bootstrapped. Today, we're going to learn about bootstrapping, building wealth, how traders actually leverage these technology platforms, and what does it mean to make trade-offs when you bootstrapped a company towards success. Thank you so much, Tejas, for joining me today.
Hey, thanks for having me.
I'm super excited to be hosting you because as I was sharing briefly, the trade-offs that you must have had to make in building a great product with a great team and serving millions of customers that you have today must be super unique. And today, a lot of what is glamorized in the news is, venture funding, raising a lot of money, valuations, which may not happen necessarily in a company which is bootstrapped. So I want to get to how you've got in here, considering you were bootstrapped. I think where we might, what might be a good point to start is where you are today. So if you can give us a very quick context and summarize how the last 10 years have been to get to the point that you are today. What is P0? And then maybe we'll go backwards and understand the journey.
Sure. We started Fyers in 2015. Business started actually in 2016. So we're in the 10th year running at the moment. Haven't raised money so far. So we built the business from the ground up, took the path less traveled, so to speak.
Yeah.
Today we're serving approximately 1 million customers, pan-India, and with a team of approximately 400 people. And we've been profitable for about 5 or 6 years now. And yeah, it's been an amazing journey. I'd love for you to unpack it.
That's amazing. No, thank you for sharing. That gives us context to the scale. Maybe let's dial back and understand how you got started. One of the things that you stand by is, you were a trader and you found this sort of problem as you were building. And that's one of the advantages of building a perfect product for the audience that you're serving, right? What was that journey like, right? Like how did you get started on your journey and how did that transform into entrepreneurship?
So I've been using investment platforms since 2006.
Oh, wow. How old were you?
Around 16 years of age.
Okay.
Back in the day, the banking brokerages, bank-backed brokerages were very popular.
Sure.
They had web interfaces, but they were all old school like everything else was back then. So I stayed the course after the 2008 crash and became a more ardent trader over the years. But I did not really have the kind of brokerage that I wished for, to be honest. And the question always drove me as to why isn't anybody building for a serious trader? When I mean serious, not necessarily a professional, but somebody who wants more tools, right?
Sure.
For a trader to set up his cockpit, so to speak, he would have had to deal with 5 different vendors. One for market data feed, another for fundamental data, execution through a broker, etc. It was quite hard. And I was among that cohort of people that could feel the pain, right? So I kept thinking this for many years before I finally had enough experience and conviction to get started. So that was the genesis of Fyers, I'd say.
Got it. Was there an inflection point, a particular incident that sort of drove you to take the leap of faith?
Yeah, I almost got cheated by a very well-known brokerage.
Okay.
I paid them a couple of lakhs in the prepaid brokerage fee, so to speak.
Okay.
I wouldn't be
a
able to
couple
name
of lakhs.
a couple of
back
lakhs
in the
because
day?
I was trading very heavily back then. And it came at a low cost, but I had to pay it upfront. But then, I mean, it was an ethical issue, and so that was one trigger point. And also, platforms were quite glitchy, and there wasn't enough transparency. If a brokerage platform went down, the reputation wouldn't be affected by too much because there was no way to really publicize that as much back in the day.
Sure.
But that was a major trigger point for me. I felt that the market lacks a brokerage that empathizes with the core audiences that I was a part of.
Got it. That's interesting. So now you know you want to start. You've been cheated by this firm. This is
Not
2015.
cheated, almost cheated. I had to do a lot
Fair.
to get the money back.
But so it's 2015. You have an idea. How do you get started? Like, what are the things that you keep core? What are the next steps? Like, how do you build or break the cold start problem?
So I never really had the money to begin with. Conviction was there, and the founding team, which consists of my brothers and me, we all had conviction. We were in our 20s. We wanted to do something with our lives. So that was there. But we didn't have enough capital, so we had to actually borrow money to start the business.
Okay.
Hard decision to take because we failed to raise money from venture capitalists.
Sure.
I had pitched at possibly almost every angel network, early stage firms,
Sure.
but I almost felt like they weren't able to understand the scope and scale of the business.
Yeah. What were
Because-
you hearing? What were you hearing?
I was hearing things like you can't buy a jet in this business, and I was almost mocked because I was being very persuasive in my approach to saying that, listen, I'm here to build a reputable, reliable, scalable business.
Sure.
But it wasn't the gold rush, and so the VCs were mostly like to show me my place. One of them, I remember saying that, can you make it big enough to buy a jet of your own? And they were expecting much more than what I was promising, I suppose.
Sure.
And I was keeping it real. I wasn't selling dreams or anything like that. And I didn't think that was a necessary part of having to raise funds, which I've heard from others over the years. But having failed to do that, I had to knock on banks' doors and other borrowers to kind of get started. So yeah, very frugal beginnings, to be honest. We started a very small, like a 200 square foot office in old side of Bangalore.
Nice.
And we didn't have money to pay like employees from the capital markets.
Sure.
And so I went out and hired interns from management colleges. So I would just motivate them, and I would also be competing besides the likes of these large banks because they would want interns to do retail banking, for instance.
Right.
But my pitch was perhaps more interesting to aspiring young management graduates, right?
Yeah.
So the first 10 to 20 of our team comprised of just young interns.
That's
And
amazing.
so we kept costs very, very low, and we built it up from there, one by one and piece by piece.
That's amazing. I think the insight is that once you have conviction, you don't let like no's stop you, and you just figure it out. Was it like, how did you trade off the risk, like the risk of borrowing money, the risk of trading off your time, effort, energy, despite the odds, or at least like the feedback that you were getting was no? What are you telling yourself?
We knew we were really good. We knew that we would go the distance. We wouldn't chicken out halfway through because we wouldn't be able to raise a fund or two, $1 million or $2 million in the beginning. So the mindset was to go all the way, no matter what. Even if nobody funds us, let's just do the business the traditional way and see what happens. There was no backing out. So we couldn't even afford like good laptops for the employees. So
But
we
you
would
still kept at it.
Yeah, so we bought these basic laptops which would break within 2 years of buying them because they wouldn't be able to handle the software upgrade and so on. But we kept things really simple. We worked with people who came to us to learn about markets. Apart from that, I'd say I knew who the target audience was,
Sure.
right? And I would just speak to them. I think the one thing that got us to start earning money immediately is because we were building for the kind of trader that I was. And so I knew exactly what I wanted,
You were the prime customer.
right? But I couldn't solve all the challenges up
Right.
front. Well, challenges were interesting to solve, but I couldn't do that all at once.
Sure.
So we took one at a time. So we became the best at, say, charting to begin with.
Sure.
That became the mission and so on.
Well, that's super interesting. I want to now get to the product. Now that we've understood, okay, you have conviction, you have self belief. Despite the no's, you make the capital happen. You figure out a team, and now you want to build the product and you want to get distribution. But before we get there, can you like maybe help us clarify like who the trader is, right? Like who is your user, like who you were, what was that persona like, and what do they look for in a platform, right? Like if you have to break it down for us, like if the question is what does a trader want in a trading tool or a platform or a product today, what are those three things?
The most basic thing that a trader wants from a platform is stability, speed, and comprehensiveness.
Okay,
Stability comes first.
sure.
Speed
Can you
comes
break it down
next.
for us?
The platform should work. It's
Right.
the equivalent of buying a car, right? Imagine if the brakes don't work or
Yeah.
if the wheel doesn't turn enough. So,
Right.
so one expects stability no matter what.
Okay,
And then comes speed.
sure.
How efficiently are you able to execute orders, and that sort of thing. And lastly, of course, comprehensiveness. And the reason I say this is because there are too many tools that would otherwise need to be connected in order to operate properly, let's just say.
Sure.
So comprehensiveness is the hardest part to build.
Right. Because it requires infrastructure, money.
Infrastructure, money, and all of that. So when we got started, for us, the main thing to achieve first was reliability. Let's come across as a reliable brokerage, right? And then came everything else.
Got it. No, that's amazing. I think that clarifies it. Can you also describe maybe in a more deeper manner that trader? Like what does that profile look like? How many times is your average customer trading a day? What do those ticket sizes look like? I mean, what is that ideal customer persona?
The typical trader type is a thinker, someone who believes he is smart and can use his smarts to make money from sitting in one corner of a room, right? An intellectual in nature. He likes the kind of guy that likes to learn about things, who enjoys dynamism, who gets bored easily, right? These are some characteristics.
Sure.
Generally has had some work experience, but is always punching above his weight because they're very ambitious in nature to begin with.
Got it.
That's why they come to the markets.
Right.
Other than the fact that they enjoy the intellectual process.
Sure.
Yeah.
If these are the characteristics, what makes a trader successful? Like, and with your journey as well, like, I mean, if you had to attribute like a couple of things, like let's say all else equal, these things exist.
Yeah.
What would be the breaking points or what are the negatives, right? Like, I mean, I'm guessing composure, all of that is important, but what are the micro things that you have witnessed?
I believe ego, the lack or the ability to deal with one's own ego is probably the biggest quality, the most important quality that a trader needs.
Okay, tell us more. Can you give us an example?
Let's say I'm bullish on the markets, right? And I feel like I'm right because I was able to read the circumstances of the markets much better than anybody else, right? And that has given me the conviction to take a bet on the market. But if I'm wrong, I should be willing to admit my mistake, take the loss and move on. Like this is the one thing that makes most smart people in the markets go broke. Because they don't know when to pull out. And even if they know, they're very egotistic.
Yeah.
And that to me is like the one big problem. Those who can deal with this effectively can spend more time in the markets. They're not going to go broke, which means that they have money to experiment with, learn and evolve. And to me, that's the most important thing.
Very interesting. What are some other traits that make traders successful?
Ability to handle boredom.
Okay.
Because it's one thing to be able to absorb a lot of information, record information, analyze information. But the best opportunities, once discovered, you need to take advantage of them.
Yeah.
And so you will need to have the mental stability to remain there and capitalize on the opportunity and not move on before it makes sense.
Sure.
And that I've mostly seen that guys who have a very sharp mind, they tend to want to move on all the time. So let's say they discovered a beautiful trading opportunity. They'll trade it a bunch of times and then just forget about it and leave.
They won't be in.
They won't be in the game enough, right? Because they're in the hunt for the next big thing,
as opposed
to capitalizing on the existing opportunity. So that's another big one. And of course, patience. Like I was telling someone recently that everyone wants 10x returns,
right.
but they don't have 10x patience. And they don't want to practice the 10x patience either.
Right.
As with investing, trading also requires patience. But the difference between trading and investing is that trading tests your patience a lot and on an everyday basis.
Right.
Because the nature of the game is that you're constantly levered.
Yeah.
With investing, you're not levered.
Right.
So your emotions are far more composed as compared to trading.
Got it. No, that's super helpful. I think that helps us understand that ideal profile of customer that you are catering to. Let's now maybe get back to, okay, now you have the money, you have some amount of capital resource from like an intern's point of view. You build that one product.
Yeah.
Where do you start feeling that, okay, this is working? Like what was that signal from the market where you felt that, okay, or your customers were delighted, where you felt that, okay, now this is working, we'll figure out the rest as we go?
So we started out with one objective. Try to offer something, and it can be anything, more than what is available in the markets. To give you an insight, back then, and to a great extent, even up until recently, all brokerages were powered by very few software vendors. In fact, it was a duopoly market where just two software vendors essentially kept the industry under their thumb.
Okay.
Right? So regardless of which broker you traded with, you'd get the same experience. Right? So when we started, we had an option to either go with them or try to do something different.
Sure.
If we succeeded, maybe we'll become relevant without having to spend money. If we went with the same vendors, then we wouldn't have any differentiation whatsoever. So it's worth taking the risk because we only have so much to lose.
Right.
So that was the mindset. It was the trader mindset, the stop loss thinking that came in. If it didn't work, we can experiment with anything else. So we launched a trading platform that looked very different, that specialized with market data feeds, both historical, real-time market data feeds. Like if, say, a competing broker was providing 3 years historical charts on cash equities, we would be offering like 20 years, for instance. So we went overboard in one respect. And traders observed that difference. And so we started to go more deeper than wider. So the philosophy internally was, it's better to go a mile deep and just an inch wide versus a mile wide and just an inch deep.
Very interesting.
And that continues to be our philosophy.
That's amazing. That is a super, super learning. What were things that you were learning in this initial phase that you didn't know about yourself? Like what were things that you're picking up on the fly? Because as a founder, you have to go through so much.
Right.
And I continuously hear that it's the best growth journey you can possibly be on. But in your case, what was that? Like what did growth look like personally in the first year or two?
So I had some amount of experience before I started the company because I come from quite a different background. So I had to deal with much older people while I was growing up.
Sure.
Because my father was a businessman who, for many reasons, he couldn't really succeed in his career. So he passed away early in his life. So he left behind a lot of debt for us to pay back. So my elder brother and I had to work, especially him, had to put in a lot of effort to kind of stabilize our financial situation. And I learned a lot from him. And so we were always used to dealing with adversities very early on. So when the push came to shove in the new venture, I was not afraid or vulnerable at all. To me, it was like, we had already seen the worst. So what can be worse than that?
Sure.
So from a growth perspective, I was dealing with different people. The environment was new. I didn't have too much work X. But I had the ability to stick on, and I realized that I have a workaholic tendency, and which was very helpful in the initial days.
Right.
Like recently the L&T chairperson made a very unpopular comment that he wants everybody to work for 90 hours a week, including Sundays. So I thought to myself, I was trying to remember how many hours I worked for. And I think I did somewhere between 70 hours for maybe like 5 or 6 years straight. So it was an all-in mindset.
Sure. Well, that's amazing. Thank you so much for sharing. Like, how do you think these like experiences shape us as individuals? I mean, to the extent you're comfortable to share, like, I mean, these early experiences in life, the adversities, like sometimes people are dealt a different card. How do you sort of like make peace with it, and how does that carry forward in life?
Everybody reacts differently to it. I grew up to be a very inquisitive person. I ask a lot of questions. And my teachers didn't like me very much in both school and college for that reason. But I asked myself a lot of questions when I was growing up, existential, also a lot to do with the economy. Why does the world work the way it does? Those kinds of things. And I realized I was very interested in learning that. So in a sense, when I got into the markets, I had to, sort of change my educational path a little bit, right? I was interested in science, but also in knowing how the world works financially. So I took the financial path very early on in school, actually.
Sure.
So by the time I was growing up in college, I knew much more than my peers because I had become a nerd by then. So I wasn't overwhelmed. All I will say is this, that childhood shapes people very differently. And I'm very fortunate that it shaped me in a way that made me challenge the odds. Like, that's the way I started to think.
Sure.
I like to take on challenges. In fact, I think that the opportunities lie in the challenges. And also when I was growing up, like, I'd see other parents, mollycoddle their children a lot. And I correlate that with how startups are today, especially funded startups, right? How investors or parents or just the warm ecosystem around them, how they sort of spoil their true potential. Right? It's the equivalent of overfeeding a child to the point of obesity.
Right. You're over-resourced.
Yeah. So I, on the other hand, grew up lean and mean. So there is a world of difference in mindset.
Absolutely. Well, that's super helpful to understand. Thank you so much for sharing. Coming back, so now you launched the screener product, if you're not wrong. That was the first one. How does the product progress? What was the feedback coming in? What did the first sort of 4 or 5 years look like till you got to a point of stabilization, and post that you said you've been profitable? But what was that like? I mean, from a capital lens, growth lens, where were you spending all your resource on? What was happening?
I don't come from a tech background, really. I was not a trained product manager, not a trained CEO. I had worked with other brokerages and as a trader. So I was learning everything on the go, right? And learn by doing became our thing. And I was very much inspired by this book called The Lean Startup by Eric Ries. So he simplified product building by breaking it down into 3 steps. Build, measure, and learn. Right? What to build came innately to me.
Sure.
Right? So we didn't have to waste too many resources. When you have too many financial constraints, right, you are forced to think more clearly and be more accurate.
Yeah.
You don't have the luxury of going all over the place.
Yeah.
You also
one
don't
or
have the
two
luxury.
things
Yeah.
well.
Yeah. And you feel the consequences of failure before they happen.
Right.
Right. And when you acknowledge that your decisions can change the course of your life, you start to think more and behave more responsibly. Right. So I think that gave us an advantage. Lack of funds actually gave us an advantage because it made us better subject matter experts.
Very interesting.
And we didn't have anybody to push us to grow fast. So we had the luxury of time, not the luxury of money, really. So with that luxury of time, we learned, and we did not have FOMO either. We didn't have much to prove. The first goal in our life was to become cash flow positive.
Yeah.
The next one was to maybe turn PAT positive.
Right.
I didn't quite understand the GMV, EBITDA positive and all of that. So first was cash flow positive so we could repay our debts and then try for PAT. So that's what
Right.
it was all about for us. So yeah, it took us, the first product was a success.
Sure.
We tried another thing called thematic investing,
Okay.
which is essentially creating baskets of stocks,
Sure.
right, based on a certain theme, like let's say
Electric
green
vehicles.
economy, which includes electric vehicles,
Right.
etc., right? Like it was quite popular back in the day. So we were one of the first ones that actually created it. But me being me, I noticed that instead of solving a customer's requirement, back then the thesis was that customers don't know where to invest. Right? I'll tell you how where the genesis of the idea came from and why I later changed my mind and pulled the product back. Essentially, we thought that customers don't know where to invest, so let's create a platform which is like a mutual fund, diversified, but also concentrated enough to provide higher returns than a mutual fund can.
Sure.
Right? Can, because mutual funds are very diversified, right? They have anywhere between 50 to 100 stocks in their portfolio. So we thought maybe we'll do like 5 to 10 stocks per theme.
Sure.
And so we launched it and we expected great things to happen. But what ended up happening was that it neither gave a customer full clarity and we misunderstood how customers think. They don't think in terms of themes. They don't think in terms of baskets. Right? They either think in terms of stocks or completely outsource the whole thing to a mutual fund. There wasn't an in-between.
Got it.
Right? So one had to really lift mountains, move mountains to fit in that in-between part, which we didn't want to do.
Sure.
We just moved on from there.
Got it.
So the ideology is to experiment, right? But acknowledge when these experiments fail, right? Fail fast and move on.
Yeah.
That saved us a lot, I think.
That's amazing.
Yeah.
No,
because our contemporaries raised money doing just that. And then it was supposed to be one thing, it became something else. And so you lose the plot if you don't recognize your mistakes.
Yeah. Well, this is amazing. I mean, the learnings on making use of constraints is super helpful and just like the focus. Does any story of can you contextualize any product release or like what did success look like? Like, was it like retention? Was it like new customer acquisition? Also, I'm guessing what you didn't have is the money to spend on marketing, right? Like, so how were you acquiring new users? Was it all word of mouth? Was it like hacky to, get through to trader communities, etc., that you were a part of? What was that like?
The main success metric in the early days was survival.
Sure.
Live another day. And then the odds of you doing much better tomorrow will increase, right?
Absolutely.
But having said that, vanity metrics was never our thing. So we never really measured all these things. Like we used to check how many users we had on a day-to-day basis, but we wouldn't hyper-optimize to see which page they were on, what they were doing, etc.
Sure.
We looked at product experience more holistically.
Okay.
And we tracked it broadly, so that we were not too distracted and... generally, that tends to happen. I've seen that with those who try to overplan, hyper-optimize and overplan. What tends to happen is that the way I see the world is in shades of gray.
Okay.
It's really not very black and white.
Tell me more.
A publicly listed company operating in a very predictable industry can create a straight line revenue projection, right? They can also tell the 3 things that a customer will do in their business or 3 products they will buy for a certain reason.
Yeah.
But when you're starting out in a field that you know little about and in which the user is evolving very quickly and fast, it's more fluid than that.
Right.
So that level of adaptability is required at the very top, at the very core. So that's how we saw it. And more often, I felt like for the first 3 years, I tried to raise funds. Like I told you earlier, I was pitching. I was pitching at every possible event, okay? It wasn't only like the marquee VCs, or I've also spoken to certain HNIs who had no idea about how startup funding works. I've also spoken to some of the most well-known ones. So I knew that the people to impress was actually the customers, not the investors. And the day I shifted our focus,
Yeah.
the team's focus from customers,
From investors.
from investors to customers, our lives changed. Because I was spending almost 50% of my time educating these guys on how it actually works.
Yeah.
I mean, of course, they'll know top
course.
down, but
Yeah, but
the nitty-gritty
Yeah.
back end,
The on-ground reality.
on-ground realities and so on. So
Got it. Would you be better off knowing that you shouldn't have spent time, or do you think it was just bad timing? What was it?
I just think God had other plans for us.
Fair.
And had I hired an investment banker, we would have probably raised money. So me being the DIY kind of guy, I tried to go the full distance and create my own deck and everything. But in hindsight, maybe that would have helped.
Got it. If you could change that, would you?
No,
Why?
because we are long-term in our thinking. I have a problem with how the up-and-coming startup entrepreneurs in general think.
Right.
They start a company with an exit mindset.
And they work backwards from there.
So essentially what we are doing is that we are building an ecosystem of sellout merchants. So how will institutions be built if the founders of those potential institutions are running for the exit all the time or as soon as possible?
Right.
You see where I'm coming from?
Yeah.
Like if India has to reach Viksit Bharat, so to speak,
Correct.
and if the ambitious founders are running for the exit, then how is it going to become Viksit is the question.
Absolutely.
So we think long term, and so we don't try to over-optimize, maximize rather. So we believe in optimizing rather than maximizing.
Sure.
And as a result, the way we look at customers changes. For example, most businesses, startups included, often look at customers like milking cows in captivity, right? The captive audience. It's a term.
Yeah.
So when you look at a customer like a cow, you're essentially trying to monetize every part of the cow.
Right.
Right? Milk and then finally goes to the slaughterhouses. We don't look at customers like that. We look at them like butterflies.
Okay.
Butterflies, and we think of the business as an orchard or a garden, a beautiful garden, right, that we're building that attracts butterflies.
You come as you want to for the attraction.
You come as you want to for the attraction or for the utility.
Right. You stay back for it.
Right.
And, you
And help us pollinate and bring your friends and others along to use our platform and experience what we're building, So that's the way we saw it, and that helped us to calm down. Like the world is not going to end. It's fine.
Right.
We don't have to run that race.
Very interesting. The anecdotes are incredible. How did you crack marketing?
We
Or
didn't.
just user acquisition? Like, what was the channel? Like, how were you getting people to come to the platform?
Mostly word of mouth.
Okay.
So I was the kind that participated online by answering people's questions about trading, right? Basic questions. But other than that, it was mostly word of mouth. Like I said, we were trying to be the orchard, the garden. And we were a very small one. We think we're still quite small, relatively. But that's how we think. And I think that's a healthy relationship between a business and a customer. Trying to trap the customer is what I'm against.
Right.
And I don't think we'll do. And so having said that, if a business has this mindset, they must aim for the long term. Obviously, right?
Absolutely. Well, that's amazing. I think what I've till now understood is, okay, you keep a lot of self-belief, you have conviction, you build a great product, you hustle your way to get your customers, and you survive long enough that it becomes extremely relevant and survival, then you go from survival to success. So let's talk about that. Like, what was that point in time where you realized that, okay, you have enough customers, it's growing, you turned cash flow positive,
Right.
you start becoming profitable. And then what did that growth journey look like? What has the last 5 years been like? Has there been a shift in strategy?
The strategy largely remains the same.
Okay.
But as you scale the growth, the percentage growth sort of moderates.
Sure.
So for example, The first 1 year we had 1,000 customers.
Okay.
Right? It took us 1 year to grow 10x to 10,000. Right? And then it took us 2 years to double from there, and another 2 years to double.
Sure.
Right? So the overall average is quite high, but as you grow, there are a lot of expectations you need to meet. You got to standardize services, make sure your customer success function is very efficient and all of that.
Right.
And I believe that enjoying that growth phase, I'm saying it more holistically, not just in terms of the numbers, the revenues and usage metrics and so on. It's the equivalent of a child growing up.
Yeah.
So think about overfeeding a child and injecting steroids, right? What do you think would happen? You grow up, the initial results would be that they will look really jacked and they can maybe win sports competitions, but their health would fall apart sooner than later.
Immunity will take a hit, long term will not be sustainable.
So we never prioritized hyper growth for quality. So it was always a very narrow balance. Never compromise quality for growth. It's the quality of growth that we were focused on. And we still do that.
Sure.
So when we see some peer overtake us in terms of number of users, I'm just like, it doesn't matter. Right? Not that it doesn't matter at all, because it affects people's perception.
Right.
But in the larger scheme of things, the world is not going to end tomorrow.
Yeah.
So having said that, it took us maybe 3 or 4 years, a little over 3 years to become operationally profitable, right? Repay our debts and whatever. And what was the other question that you had asked with respect?
No, just like, and then since does the strategy change, and what does like cash flow positive mean? Where do you put in the profits? How do you consolidate maybe more growth?
We pumped the profits back into the business, obviously.
Sure.
Because in the nature of business that we are in, capital markets, many think that it is not capital intensive because it's just a platform, but in reality it is because of margining, mostly margining requirements and scale up and so on. So we kept deploying the profits back in the business mostly. And we started to hire more skilled and experienced people, right?
Right.
So the costs just balloon a lot. So you had to create a buffer, a treasury, in order for you to scale up professionally.
Right.
Because typically what tends to happen with founder-run companies is that they fail to make that transition to going from a one-man shop, founder-driven org to a more professionally run org.
Right.
And we were quite clear that we wanted to make that transition. So every year we would hire, and hiring never stops at Fyers. Although we don't hire in batches.
Right. But you're always looking for great talent.
So we're always looking for talent. And that's quite an organic way to build a team as opposed to hiring in batches. So what tends to happen, on the contrary, in say a startup that has raised a few $1 million, there are timelines set from the very beginning. So you gotta hire fast. So you tend to compromise on the kind of people you hire. So that becomes a DNA liability later on.
Right.
When you don't have those timelines, you can spend enough time to
get it right.
To get it right and pick and choose.
Yeah.
Right? So we look at it more like think of jungle versus a farm.
Okay.
A jungle evolves organically.
Right.
Right.
Farm, you have to inorganically.
And that's the relative comparison.
Got it.
Yeah.
That's super refreshing to hear. I think very, very interesting thoughts. On the talent piece by itself, right? Like I continuously hear from founders that remains to be a challenge, because getting like people right first time around, or when you get it wrong, being open to accepting that, firing fast is a continuous challenge. How has your thought process on that evolved? Like what is right in the financial sort of world even mean, right? Because this is also like a high trust, very fast evolving world. What has that meant for you? How have you changed your mind on it?
Hiring fast and firing fast is the worst possible thing a startup can do for its own survival.
Okay.
Because when you fire fast, right, you're also hiring the kind of people who don't mind getting fired, who are also who quickly hop on to the next big thing and just move, right? So the relationship becomes very transactional and contractual.
As opposed to long term.
As opposed to long term, because what we try to do is hire people who want to build a career in an area that they are super passionate about. So I keep telling everyone at Fyers, ours is more like a family, but all the members within this family know that their role is important and that other people's lives can get affected as a result of not performing properly. So there's no room to become complacent. However, there is a sense of belonging, and that, because otherwise, like most of these founders, I have a lot of founder friends.
Sure.
And when the relationship is only about money,
That doesn't work.
yes, they don't stick around, because life is not about money only, right? At the end of the day, a work week can be anything from 50 to 70 hours in startups, right? And so imagine pushing people just on the basis of money,
Yeah.
right? And if you succeed, you're building a team with people who are just mercenaries, and they can be bought with money, more money,
Right.
meaning that they're
Somebody
open to
else.
being poached, right?
Right.
So that's that.
Got it. Well, that's super, super interesting to hear. Has your thought process evolved on a bootstrap company being able to attract talent versus like a funded company being able to attract talent, just because there's more PR, news, etc. around it?
It's the kind of people you tend to attract, right? And the message has to be clear and strong. There is no room for confusion. Like, make no mistake, just because when a startup raises funds, right, it's the beginning of
Of a
something
journey.
new.
Right.
It's the beginning of, but it's often treated as the end, right? It's like as though funding was the goal to begin with, and that's not a very healthy way of running an organization. And if that is going to then attract people on the basis of that, you're anyways going to attract the wrong kind of people.
You self-select by virtue of being bootstrapped and the kind of positioning you have.
Yeah. But that doesn't mean you can't find talent.
Right.
As long as you pay people well, and as long as they're aligned with your vision,
Yeah.
you're good to go, as I have experienced. We
That's
do work
amazing.
with people who come from funded startups, and very large ones at that.
Right.
But it's really not about that. People don't think like that. Anyone who's trying to find meaning in their work is willing to gravitate towards the kind of career that they always wanted to pursue but could not.
Yeah. That's amazing. I want to get to cyclicality in your business, right? Considering that you're in the financial sort of markets, right? That's where your customer is sort of dealing. There's a lot of cyclicality from a COVID lens, from, many world events that have happened in the 10 years that you've been around, right? Like, how does that impact your business in turn, right? Like, how do you deal with like a bull market or a bear market or a UPI or some change in policy? Like, what does that mean for you?
First of all, the changes are crazy. Like,
Yeah.
so many, and the changes are happening from so many different directions. One, from a regulatory standpoint, we have probably been through the fastest reforming period in our capital markets history after the 1991 reforms, after SEBI was formed.
Yeah.
Right. So crazy reforms on the regulatory side, geopolitical, bull markets, sideways, also from competition in general.
Right.
And because we operate in a, let's just say, a very competitive market,
Yeah.
purely based on the number of players,
Right.
not necessarily their capabilities.
Right.
The barriers to entry from just a licensing perspective is low. And so that also has some amount of impact. How have we dealt with it? Number one, remain very agile, right? Try to preempt, because most people think that predicting is bad because they tend to get it wrong. But I think being a good, having enough skill to predict well is an important part of entrepreneurship. You have to have foresight.
Right.
You can't just look at the rear view mirror and make decisions about the future.
Yeah.
Right. So that has helped us navigate very well. And also the way we scale up costs. Right? Let's just say it's aligned with the market conditions. If, let's say, there's a bull market in the making, we will ramp up our expenses, but it won't be ramped up to an extent that we will collapse if it doesn't work out the way we expected it to. It's the equivalent of, we will go from third gear to fifth gear, but if there's traffic on the road, we will know how to come back from fifth gear back to third gear as well.
Got it. No, that's super interesting. And can you like share any anecdote that comes to mind? Like what was COVID like, or what was like the two like bull years like? Like how did you sort of manage, right? Like I mean, what was the sentiment within the team? What were you thinking? How do you come? Like what was the rise of it?
COVID was do or die, right? Thank God that the government did not shut down the stock exchanges.
Right.
Because if they had, a lot of bad things would have happened in the economy, because it's an avenue for people to also pull out their money. It's not just a one-way street where people invest, right? When people are in difficulties, you need an avenue to pull money out of the market as well. So they kept the markets open. And in hindsight, that turned out to be a big blessing in disguise. But when we were living it real time, we thought that, this could be the end of the world. Because at the time, I had COVID. My brother had COVID. And both of us were just like, shit, is this the end? Because people were dying. That's all we were reading about and watching on news all day. But we worked through it. And what can I say? And the funny part is that we had to hire a lot in COVID. We did not really have a HR department then. So I would spend like 50% of my time just hiring randomly at that. But because we're so careful about what kind of people we hire, I had to spend that much more time doing it.
Sure.
And when the lockdown was lifted, we were one of the first to announce work from office. Because at that time, there was a few very popular influencers who said that they would do permanent work from home. The way people work has changed. Human beings have changed and stuff like that. But I firmly believed that people were becoming unproductive, extremely distracted, and losing touch with what it is to be social in general.
Right.
And so took a firm call, and we had almost 1/10 of our team resign at that point. Almost. So I'm like, you know what? We're not gonna. I mean, I owe my allegiance to our customers,
right?
Because I can't compromise on the quality aspect. And so we just got back. We took the risk, and we got everybody vaccinated, and then we moved on.
Very interesting. Taking a step back from, let's say, Fyers, if I had to ask you on just like generally your learnings around the financial markets, right? Just by being such a important part of it.
Yeah.
What do you have to like say? Because we hear all kinds of like, we also hear like traders contribute to a majority of the volume. There are all kinds of these statistics. What has been your vantage point, learnings, and insight to just being a participant from your trading journey and then from your startup entrepreneurial journey?
There are only about 50 lakh very active traders in India.
Okay.
And all in all, about 1 crore traders.
Okay.
Right, who are not always active. Let's just say they're semi-active. And India is an overbroked market.
Okay.
As everyone's just chasing those guys.
Right.
But I see that as a very narrow-minded approach. Because a few brokerages have done very well. There are now new startups coming to do the same thing and so on. But that's not really changing anyone's life by much. And what we need is innovation. And that's what we're trying to do. Right? So we started to innovate. So the thing is, like, innovation is not easy, number one, in terms of having to invest in it while others are not. Right? It requires one to believe that change is needed, even when sometimes customers don't ask for it.
Sure.
So we have that willingness to keep experimenting. So the ideology is to keep building and allow for customers to discover something new, and then let them give us the feedback as to whether they found it useful or not. Take it on the chin if they don't like it. Like I'm really good at one thing, and that is to face the music. I am always at the forefront, not just representing Fyers. Behind me, there's a very strong, capable, professional team which would run the company with or without me. So I take the privilege of representing them, but also I'd say that I come forward 2 steps forward to take brickbats from customers too when our experiments fail, and many of them have.
Sure.
But that doesn't stop us.
From
It gives us builds a thick skin, so we
Sure.
continue to go forward. Like things like AI now, right? Everyone's talking about AI,
Yeah.
buzzword, so to speak. Everybody, it's like what .com used to be almost.
Yeah.
Yeah,
Wow. How much of it is real?
very little.
Okay.
In fact, in the initial days, I used to speak to people. I've also attended events where I was supposedly invited to be a speaker to speak about AI, right? But I wasn't an expert at AI. I'm like, what the hell is happening?
Right.
You didn't even bother to check my credentials.
Right.
So there's a lot of rhetoric around AI. So we started to build our expertise, rather not expertise, I'd say foundational knowledge on AI and see where we could get started.
Mm-hmm.
Right? So we now have a tool which helps to discover market opportunities.
Okay.
Right? It's a screener, but it uses some amount of AI. But we've got to start in that direction. Let's just say it's an experimental phase at this point.
Sure.
And there are no money targets.
Hmm.
If it happens, it happens.
Got it. No, that's super interesting. I think we've covered a bunch of ground. I want to, towards the end, cover a couple of things on your personal sort of persona. One of the things there is, there's often like things that you discover about yourself that you didn't know. There are many things that you did know. Like, for instance, being great in front of adversity, really like shining, even though it might be in bad moments, and being in front of the fire. But what are things that you didn't know about yourself that you have discovered in the last 10 years?
I always thought I was very aggressive, and I was told by people in general that I was a very aggressive guy in the way that I approach sports or how I play chess and things like that. But I've come to discover that, and also aggressive in the sense that I was less patient.
Intense
Yes.
or aggressive?
Yeah, but intensity is a combo of aggressiveness and also a little bit lack of patience,
Fair.
right? But over time, I've discovered that that's not true.
Okay.
I'm able to change that, and I have learned a lot of patience on the go, because running a business is like playing a test match or being a farmer. You can't harvest the crop before cultivating it. And the cultivation period can just be a very extended one. You have to live through it day by day.
Right.
And as a trader, I thought initially that I'm short term in my thinking, because traders inherently think short term,
Right.
which is why they're jumping out of trades and hopping into new ones. And today I deal with like lakhs of traders who think short term, but to deal with them, I've had to think long term. So while I deal with people who think short term, I actually think long term. So that's something that I've learned about myself. And that money is not the primary motivator. Money is a way to keep score. Money is important, I think. But I've learned that like I don't really desire very many things in general, like material things. I like to live well, but I'm not really crazy about buying a Ferrari or anything like that.
Sure.
If it happens, it happens because somebody else wants it. But I'm just saying. So these are some things that I've discovered. Yeah.
Super interesting. If I had to ask a group of your friends to describe you, what would they say?
I don't know. I really
If you had to venture a guess.
I try not to think about it because
This is just to gauge your personality beyond work.
they'd probably think that I'm a health freak,
Okay.
but I'm not. I'm definitely not.
Okay.
Just because I exercise, I try to exercise 3 times a week doesn't make me that. They also think that I sometimes come across as a philosopher, which I can't really say much about.
Okay.
I think I just like to think outside the box, and
So-
I'm very self-critical about my own, let's just say, commitment and capabilities. So
Has that
I try
always
not
been
to
the
think
case?
about it. Yeah.
What
I've
is it
always
like
had
that?
the underdog syndrome.
Okay. What does that mean?
It means that you are the type of guy in a peer group that doesn't who's always underestimated, right? And in the context of business and startups, I was the underdog, right? Because I don't come from the reputable B school, or rather more widely known B school like IIMs, or I don't come from the IITs or anything like that.
Sure.
I had a very different upbringing. So in the context of startups and business, I do have that syndrome, which I believe has served my best interests.
Sure.
Yeah, because when people underestimate, you don't really, at least I've learned not to care about other people's opinion too much. I do care, but not too much.
Fair. No, very, very, very cool. In a world where, let's say, trading did not exist, right? Or like financial markets did not exist, what would you be doing? Considering your business is also in that line of work.
That's a googly. Okay. What would I be doing? I don't know. I'd probably be an athlete.
Oh, interesting. So you are health freak.
Not really. I just enjoy competition, I guess.
Interesting.
Yeah.
Fair. For the second last question, I'd love to understand if there are things that you think of almost as your like value system, or like, the 4-5 things that you wouldn't deviate from. And this is more like life specific, not like necessarily work specific. But if you had a guiding principle for life, what would that look like?
Guiding principle for life outside of work?
Yes.
Most importantly, never compromise on independence.
Okay.
Freedom means more to me than money or anything else. Say never, always have an open mind. So the Japanese have a term to describe this. It's called shoshin,
Okay.
which translates to a beginner's mind. It's a part of Zen Buddhism. Essentially, in an expert's mind, there are very few possibilities because they think they know it all. But in a beginner's mind,
Everything's possible.
everything is open and endless, right? So to me, I think it's important to have that open mind. No matter how much you learn, you never know it all.
Nice.
That's one. And I also like what Socrates said. He said something on the lines of, there are 2 types of people in the world. There's one, the foolish people who think they are wise. And then there are wise people that know that they are foolish. And I'd rather be the latter than the former.
Yeah.
Yeah.
Oh, that's pretty cool. I actually think there's another question worth asking before the last one, which is like, you spoke about money, and sometimes like in bootstrap companies, well, it can be, let's say, tougher from a resource constraint lens. It can also lead to higher amount of wealth. Do you have a perspective on bootstrapping vis-a-vis raising from just like a personal wealth creation point of view?
It depends. It depends on how big you can make it as a bootstrap startup.
Sure.
The size matters ultimately.
Absolutely.
But what I've noticed is over the years, founders dilute to a point where they no longer control not just the company but the outcomes. They start as founders, but they become irrelevant over time.
Because they own too little of it.
They own too little, and they also don't have the best rights. They've signed away most of their rights with each round of funding. And their ultimate outcome happens in a large secondary or through IPO.
Right. Which are both rare outcomes.
Which are quite rare.
Right.
And not just for them, it's also for people who work in such companies.
Right.
So that's what I think. Skin in the game is also determined by how much founders own. Like, why would a guy put in the effort if he owns only, like, say, 3% of the company that he started?
Right.
He'd become an employee with KRAs measured by KPIs every year. So that's not really... So the vision becomes compromised somewhere down the line. And that's what is most important in any company.
Right.
When the vision is compromised, everything is at stake. So that's what I think.
Got it.
But in terms of, just to round up on that, can wealth be created that way? Of course. Many of them have.
Yeah. There are many examples.
It's just a different style, I'd say.
Yeah. There are many ways to create wealth. Bootstrapping and owning everything of what you've created is one way. And I think that's a very rounded opinion. Thank you for sharing. For the last question, it's typical to our style of sort of ending, which is we go back to a significant time in a founder's life, and let's say maybe the time you were starting Fyers. If you could go back and tell yourself something, and by extension, hopefully we're hoping to learn what you have learned from hindsight in the last 10, 11 years, what would that look like?
What would I tell my younger self?
Yes.
That's-
When on the day you were starting Fyers, if you could.
The one big thing I tell myself is don't allow the so-called professionals to confuse you. What tends to happen is you start with a conviction and it works.
Right.
You see it working. But there are all these other people who come in and
Give
who
you
seemingly
advice.
have a lot more experience, the consultant variety.
Yeah.
And then they start to tell you how it's supposed to be done. And when you follow their path, then I've experienced that it can go awry and all over the place and confuse the hell out of you. And you must kind of find your feet. It takes a while.
Sure.
So that's one thing I tell myself.
Nice. How do you decide whose advice to trust and whose advice to not?
Instinct. You build it over time. Yeah.
You know.
Yeah. Especially those who've had to do things themselves. Like the self-made variety are generally much better at gauging people and opportunities better.
Sure.
Like those who are mollycoddled and always asked to follow instructions either of parents or mentors, they often look for advice, and even with the best advice, they have second thoughts about what should be done.
Yeah. Got it.
Yeah.
Well, that's amazing. And that's a great note to end on. I think we've covered so much around how you've gone ahead and built the company, a great product with constraints and despite constraints rather, and built a successful company and hopefully only onwards and growth oriented from here on. Thank you so much, Tejas, for your time. This was really helpful, and I'm sure anybody watching is going to benefit largely from it.
Thank you. I hope they do.
Yes, awesome. Thank you so
It's fun
much.
being here.
Hello. If you made it this far, you've probably watched the entire episode. And if you've done that, I'm really grateful. I and my team try to put in a lot of effort to ensure that we can bring the best quality content to you. So if you liked the episode, if you watched it thus far, my request to you is to share it with people, to subscribe to the channel, and to ensure that we can keep growing. We are everything and anything only because of you, our listeners. Thank you so much for tuning in. We'll keep bringing to you amazing content. Cheers.